Okay, perfect. And we are live. So welcome everyone who's joining for our presentation today. Thank you very much for joining us. I've been looking forward to this for quite a long time. I know we've had a lot of interest in the new virtual asset service bill, and I'm really looking forward to hearing what everyone has to say. Sorry. Just getting a little bit of feedback there. Apologies about that, everyone. So just to give you the quick layout of exactly how today is going to work, Minister Rivers is going to do our introductory remarks for us. After that, we're going to have a panel discussion. We've got representatives from a local law firm, from CIMA, as well as the Ministry of Financial Services. And then we're going to close off with a few questions that we've received from the audience. So really looking forward to the discussion. Minister Rivers, I'll hand over to you for your opening remarks.
Thank you very much, and good afternoon, everyone. It is indeed a pleasure to address you all today during this unprecedented time in our history. I want to thank the Blockchain Association of the Cayman Islands for partnering with the Ministry of Financial Services to stage today's virtual event. We have all seen where the COVID-19 pandemic has had a tangible effect on the business relationships around the world. While we in the Cayman Islands are operating within a relatively safe bubble, thanks to the hard work of the government and, of course, the cooperation of the citizens and residents at large, there obviously has been some discussion surrounding the global situation and its short, medium, and potential long-term impacts on the economy as a whole, including that of our financial services industry. So with respect to financial services, I believe, ladies and gentlemen, that the prognosis remains very optimistic. I'm confident that as a jurisdiction, we will continue to innovate and practice the level of compliance and engagement necessary to sustain and grow our economic activity in a manner that is consistent with our status as a leading global financial center. The financial services industry continues to be a major priority for the Cayman Islands government. As we look to the future, work will continue to ensure that the jurisdiction can aptly respond to the global challenges and to enable the jurisdiction to continue attracting sound business here. Since taking office in 2017, a major part of the strategy adopted has been to strengthen our regulatory frameworks while continuing to innovate at the same time. As Minister with responsibility for financial services, I'm pleased to provide you with an update on government's most recent work with regards to the financial technology, or FinTech for short. While we've had to navigate some challenges to reach this point in our history as a global financial center, there are likewise many opportunities for us to seize with your support as industry professionals. As the late Winston Churchill once said, quote, "A pessimist sees the difficulty in every opportunity, and an optimist sees the opportunity in every difficulty," end quote. In setting the tone for today's conversation, my remarks will primarily focus on the virtual assets and virtual asset service providers, or VASPs for short, and Cayman's newly adopted legal framework around their activities. So the Cayman Islands has steadily been making progress to create an environment where VASPs can conduct their business with certainty and precision. In providing a solid foundation for VASPs, Cayman's regulatory framework focuses on two key activities, namely the operation of virtual asset trading platforms, also called exchanges, and the operation of virtual asset custodians. Persons licensed to undertake these activities will be required to uphold minimum technology, data protection, and disclosure standards. Specifically, the regulatory measures put in place via the virtual asset licensing regime focus on protecting users of the service by emphasizing transparency through measures such as providing appropriate disclosures in order to make persons aware of the risks. Regulating the aforementioned activities is meant to provide oversight, prevent loss to consumers, and provide a stable base on which virtual asset services can develop and grow. While we appreciate the strong desire within industry to have our regime up and running, like yesterday, The Ministry and CIMA are taking a measured approach to ensure the right balance is struck between commercial needs and regulatory obligations. A chief concern is to ensure that the framework incorporates and addresses the global standards set by the Financial Action Task Force with respect to the use of virtual assets. At the moment, the Department of Financial Services is working with the Cayman Islands Monetary Authority on regulations to operationalize the VASPs regime. CIMA is working on an action plan to address the implementation of the VASP-related laws and regulations. The implementation plan will focus on resourcing and building a risk-appropriate supervisory framework. You will hear more from the Ministry and the CIMA representatives later this afternoon. While CIMA has been focusing on developing and operationalizing the implementation plan, the Ministry has focused on an industry consultation regarding the regulations. The consultation, which was completed earlier this month, attracted a fair amount of comments regarding the proposed guidelines. As always, your feedback was greatly appreciated, and there is a lot to consider prior to the commencement of the VASPs regime, which is anticipated to be in effect before the end of this year. I would especially like to thank the Blockchain Association of the Cayman Islands for their contributions. Over the course of its short existence, the association has provided invaluable input, not only on the way forward for virtual assets in the jurisdiction, but also on other important financial services matters. The Department of Financial Services is currently reviewing the consultation results, and I would encourage you all to stay tuned for the upcoming panel discussions as my ministry staff will join CIMA in discussing, among other topics, the next steps after the consultation. The Cayman Islands is continuing to innovate and stay on the cutting edge of new trends in the midst of a pandemic, no less. Our new virtual asset service providers regulatory framework for the delivery or the digital delivery of financial services creates great opportunities and optimism about the prospects for the jurisdiction. In Cayman, a virtual asset is defined as a digital representation of value that can be electronically traded and used for investment purposes. Popular examples of virtual assets are commonly called cryptocurrencies, digital assets, or digital tokens. Our framework for VASPs, which are the entities who offer financial services using these virtual assets, centers on the Virtual Asset Service Providers Law 2020 and includes amendments to other supporting legislation. These laws were passed by the Legislative Assembly earlier this year in May, and as I indicated earlier, the government expects to bring them into force in the very near future and certainly before the end of the year. One of the more remarkable aspects during the legislative process has been the desire for strong regulations expressed by you and your industry peers. It was made clear to us that you felt the lack of regulation in the local space was an issue, and that creating a sound regulatory framework that adds clarity to your activities is actually a good thing. I commend you all for this stance, as I believe we have arrived at a framework that better positions the Cayman Islands to accommodate the new digital age developing rapidly around us. The framework is designed to bring new business and clients to our shores in an area that, according to global data, is growing significantly. For example, the trade publication Cointelegraph suggests that in 2019 alone, the equivalent of more than US $1 trillion was transacted globally using virtual assets. In discussing the VASPs framework, it is important to say a few words about the issuances of virtual assets, or ICOs, as they are commonly known as. As a jurisdiction, we welcome legitimate virtual asset issuances. Many ICOs have originated from the Cayman Islands in the past few years, and Cayman is a jurisdiction of choice for technology companies to fund projects. According to Statista, a leading statistics portal for market research, US $1.34 billion was raised by Cayman ICOs for the first 11 months of 2019. Part of the intention of our VASP regime is to ensure that there is a common standard of accountability going forward. In regulating these activities, the government made sure that the VASP framework encapsulates the newly established global standards for anti-money laundering, countering the financing of terrorism, and countering proliferation financing for virtual assets adopted by the Financial Action Task Force, or FATF, which is the intergovernmental standard setting body in this space. Cayman's framework also includes a modernized regulatory sandbox regime that grants CIMA additional flexibility and adaptability in developing regulatory solutions that do not fit the traditional frameworks. Bespoke supervision can then be created for VASPs, which offer innovative services to use technologies which are not properly supervised under current regulatory laws. These VASPs would then be directed by CIMA to apply for such a sandbox license. Additionally, fintech service providers who are not engaged in VASP activity, but are developing new solutions and technologies that can be applied to regulated financial services will have the benefit of the sandbox support from a regulatory perspective as they innovate in the market. The sandbox will allow CIMA to observe, supervise, and monitor these new technologies and services, often before they are used or offered to the public, thereby facilitating and accelerating the adoption of these solutions. The sandbox will also allow guidance, regulation, and legislation to be adapted to emerging trends. As I mentioned previously, in developing our VASP framework, government went to great lengths to ensure that we adequately considered the position of the FATF, including its regional body, the Caribbean Financial Action Task Force. In recent years, Cayman's public and private sectors have jointly responded to the CFATF Mutual Evaluation Report of our AML, CFT, CPF legislative and regulatory framework. Cayman's AML, CFT, CPF regime has certainly been enhanced over the past several years, and the government continues to substantially address the CFATF's recommendations published in the March 2019 fourth round mutual evaluation report of the Cayman Islands. It is expected that the outcomes of Cayman's re-rating by the CFATF on our technical compliance with the CFATF's recommendation will be reported on at their November plenary, with the FATF's review of our regime to be completed shortly thereafter. To explain the CFATF's re-rating evaluates, the CFATF's re-rating evaluates a jurisdiction's progress in addressing the FATF's technical compliance concerns identified in the mutual evaluation report. The FATF rating speaks to Cayman's effectiveness in implementing the FATF's recommendation. As is often the case with these international assessments, there are evolving global developments that impact proceedings as they occur. In this scenario, the FATF adopted changes in 2019 to its methodology for Recommendation 15 regarding virtual asset services after the finalization and publication of the Cayman Islands fourth round mutual evaluation report. So due to these changes, our VASP regime will now be assessed as part of Cayman's CFATF technical compliance re-rating exercise, which will include an assessment of our compliance with the revised FATF Recommendation 15. So as it stands, Cayman's CFATF technical compliance review is currently underway, as I said, and is scheduled to be completed before the end of this year. From there, the FATF will provide the results of their effectiveness assessment at the first plenary meeting in the new year. We expect that the FATF will announce its findings by the end of Q1 in 2021. In addition to timing, the government also opted to ensure that the legislation adopted can be easily understood by the FATF assessors. As more VASPs seek to operate from within the Cayman Islands, it would be helpful to not only further explain our framework, but also to help explain the FATF language used in the legislation. We appreciate that adherence to the FATF language may result in terminology that is a bit unconventional to industry. Nonetheless, it is anticipated that the forthcoming documentation on the VASPs regime will help to clarify any ambiguities that may exist. So in closing, despite the challenges that COVID-19 poses, there are opportunities in financial services that lay ahead. A key part of our response to the pandemic thus far in both the public and private sector is the ability to embrace technology in a greater way to keep business activities and the economy going. There is indeed a government push to incorporate more technological solutions to increase efficiency, and advancing the VASP regime is part of our desire to make the Cayman Islands a more technologically savvy and attractive jurisdiction. Going forward, we expect virtual assets and the corporate service providers who work with them to play a greater role in the future of the financial services industry in the Cayman Islands. Government is keen to ensure Cayman's leadership position in the virtual asset space and will continue to work with industry and CIMA to ensure that the right balance is struck between commercial desires and regulatory needs. Ultimately, the VASP framework we have adopted is a result of an extensive engagement and development process that began in earnest in early 2018. I thank the local financial services industry representatives, including the Blockchain Association of the Cayman Islands, and the regulatory stakeholders who provided their time and insight towards the development of this important legislation, which can help to realize a number of opportunities for the Cayman Islands. At the end of the day, ladies and gentlemen, all of the progress we have made with regard to virtual assets is indicative of the fact that our teamwork as a jurisdiction is effective. I'm confident that together as government, regulators, and industry, we will ensure that the Cayman Islands remains long into the future the jurisdiction of choice for sound business around the world. Thank you all and have a great discussion to follow.
Perfect. Thank you very much, Mr. Rivers. We really appreciate hearing from you, and we really appreciate you taking the time and the commitment that you and your department have to virtual assets and ensuring these assets are, and Cayman is seen as a premier destination for these assets. So now we're going to move over to the next part of our conversation, which is a panel discussion. And I'd like to first just introduce our different panel members. So on our panel today, we will have Melissa Lim, who is a partner from Walkers. We also have Sarah Wheeler representing CIMA. And then we have Samuel Jacques Cotelier. I hope I didn't butcher that too badly, Samuel, representing the Ministry of Financial Services. So I wanted to kick off, firstly, Melissa, just to find out from your side, you've now heard from Minister Rivers, you're in industry, you're talking to different service providers. What has your experience so far been? How has the new legislation been received in industry?
Hi, Petri. Hi, everyone. The industry has been awaiting the legislation on virtual assets for a while now. So it's great to see that this will be coming into effect this year. By having such legislation, this gives greater certainty to the participants in the virtual assets industry and also gives greater credibility to Cayman entities that engage in virtual asset services because they now have the ability to be registered or licensed under the VASP law once it comes into effect. And in fact, I have received feedback from market participants that they are looking to register or be licensed under the VASP law, in particular, virtual asset trading platforms, which is all very positive. The press releases given to date by the ministry, the consultation with the industry on the VASP law and regulations, this panel shows that the ministry and CIMA are very willing to engage with the industry and that they're committed to developing this industry, which is again, very positive. And the feedback that I get from industry is that the industry welcomes such engagement and industry outreach by the ministry and CIMA. The proposed Sandbox regime under the VASP law has also created a lot of excitement in the industry, as it is beneficial to be able to work with the regulator on innovative ideas in a regulatory safe haven. I would say that the introduction of the VASP law is seen by industry as a step in the right direction. We already have a strong infrastructure in Cayman of banks, accountants, lawyers, and other service providers that have been built on the financial services industry. And now this is our opportunity to layer on that infrastructure by growing the tech and virtual assets industry, whether it's through the VASP law, the regulatory sandbox, government initiatives like Cayman Tech City and Tech Cayman, association groups like the Blockchain Association, Digital Cayman, and Code Cayman. So I do believe that the new legislation has been well received by industry, subject to certain clarifications, and the industry will need guidance from the Ministry and CIMA, as this is a new law. And as with any new law, there will be differing interpretations on how the law will operate. And I do encourage the Ministry and CIMA to continue with consultation with industry, obtaining feedback from industry, and engaging with industry as the legislation evolves. And I think this panel is a good sign that the Ministry and CIMA are endeavoring to address this by starting, well, this first of hopefully many industry outreach events.
Perfect. Thank you very much, Melissa. Next, I'd actually like to go over to you, Sarah. One of the questions we've gotten quite a lot, and a lot of people have been interested, is in timelines. I know we've got the registration regime, we've got the licensing coming up, and lots of people have been asking about rough timelines. Can you give us any insight into when those will actually come into effect?
Yes, of course. And thank you very much to the Blockchain Association for inviting me to this panel today. And thank you to Minister Rivers. I thought that was an excellent opening presentation, which really did outline the legislation and the thinking behind it. And I did wonder if there was that much more I could add to her presentation, but I will try. So for those of you who don't know me, I am the head of the AML division at CIMA. And it's no coincidence that I've been asked to be on this panel today, not least because of the backdrop of where we are with the FATF, as Minister Rivers explained, but also because, to answer your question, Petrie, on our approach and the plan that we are trying to devise, although we are finalising the details as to exact dates and timing, I can say that it will be a staged approach with a heavy focus on AML-CFT in the first instance, moving to a later stage whereby the full licensing and registration applications can be made. Now, the thinking behind that is that we wanted to identify and supervise the highest risk actors in the sector as quickly as we could. And so what does that involve? I'm sure you're all asking. Well, there will be some kind of registration process at the outset, which will be a simple registration. And the idea of that is that we can then focus on, we can immediately see areas of AML risk. And as supervisors, we have tools at our disposal that we can exercise before entities enter the regulatory sphere. We can obviously speak to other agencies. We can consider our gateway is a key tool that we can use. And it also enables us, of course, to have early discussions with some entities who may not have all the information they require even for even the initial stage of registration. So the idea is that will be our immediate supervisory focus on a risk-based approach. And the idea, as I said, is to prevent and disrupt where we see high-risk activities or high-risk actors. And I think to echo really what Melissa said and Minister Rivers, we want to create a regime that the industry can trust, that industry has faith in, and that will attract the right kind of business to the jurisdiction. So that's why our primary focus will be AML-CFT.
Okay, perfect. Thank you very much, Sarah. Next, Sam, I'd like to go over to you. So this is actually a question that we received quite a lot from our members, especially during the consultation process. And that was around the issuance of virtual assets and why that was included in the bill. So can you give us any insight into the thought process behind that?
Of course, and thank you for having us here on the panel. I think this is a great opportunity to share and communicate with those who are actually engaged in virtual asset services. So when it comes to issuances, I'll start by saying that a virtual asset issuance is very different from a traditional fundraising mechanism. Digital tokens can easily be created and sold directly to participants, and sometimes even without any oversight or the need to go through regulated third parties. So in other words, it's possible to do a virtual asset without having to engage a facilitator, broker, or an investment bank. That means that there's often no mechanism to ensure proper disclosures are given to participants, and sometimes that there isn't any real way for participants to even determine who the real controlling persons are behind an issuance. So I think everyone here listening to this would be well aware of the risks associated with virtual asset issuances, or ICOs as they're commonly known. Most countries in the world, like the US, UK, or Canada, and even Cayman, have issued warnings to the public regarding virtual asset issuances. They would outline the risks and potential downfalls, and we've all heard and read about scams around high-profile ICOs that went wrong one way or another. So it's safe to say that virtual asset issuances are a fairly risky proposition, and they do need some kind of supervision. And I've seen this with many fintech companies now opting to do IPOs or regulated coin offerings as well. So when we created the VASP law, we assessed the various virtual asset activities taking place in the jurisdiction. And we determined that a framework was needed to make sure that issuances taking place in or from within the jurisdiction have a minimum standard of supervision. Our intent is to provide a stable foundation on which issuances can take place. For example, under the current framework, when an individual participates in a Cayman virtual asset issuance, he or she will know that the issuer has been registered by a regulatory body, that basic checks have been performed on the entity's owners and decision makers, and finally that the issuance was approved by a supervisor. So this doesn't mean issuance is guaranteed in any way or risk-free, but it should give investors an additional degree of comfort, which should then ultimately help an issuer attract participants to the issuance. The measures around virtual asset issuances also preserve Cayman's reputation as a choice jurisdiction for financial services business. And they also ensure that appropriate anti-money laundering and countering the financing of terrorism and proliferation measures are complied with. Sorry, that's a long list of acronyms there, AML, CFT, CPF, I think it is. So we're currently working on regulations for the VASP law now, and those regulations will include details on how the application process for an issuance will take place and what will be needed. So we'll try and make that as streamlined as possible, but really our intent here is to provide a sound base on which virtual asset issuances can be performed here in the jurisdiction.
Great, thank you, Samuel. I think that clarifies it quite a lot. It really helps out. Sarah, I wanted to go over to you next, and this might be a difficult question, but it's one that I've heard quite a lot in industry. And a lot of people have asked, is CIMA actually ready to regulate and oversee VASPs? So can you maybe talk to us about your process, what preparation you've done to be actually looking after the VASPs?
Yes, so Minister Rivers mentioned the action plan. So as part of that, we're obviously looking at every aspect of providing robust and effective supervision of the sector. So that will look at skill sets of resourcing, use of technology, having the right guidance, regulations in place, etc. And what I can say is we're very much prepared to start supervising for AML CFT without delay. Many of the entities, they've already been within under the jurisdiction of the AMLRs for some time, so there shouldn't be some huge surprises there as to the types of controls they would be required to have in place. We are also considering leveraging from other agencies such as the Cayman Islands Bureau of Financial Investigation and the Financial Reporting Authority to use technology to be able to look really closely at transactions from the get-go. So in that respect, we will be able to, even before accepting any applications, registrations, be able to start supervising and, as I said, disrupting in that sector. In terms of the broader licensing and registration regimes, we will obviously give those the careful thought that are required and in the process of devising the nuanced rules and guidance that will go around those different activities, because of course there are several different activities that will fall within the regulations. And the idea is that when those come into force, we will be fully prepared to assess those applications and exercise our supervisory and enforcement powers if appropriate.
Great, thank you, Sarah. Next, Melissa, I wanted to hand over to you. I know in your opening remarks, you sort of spoke about some things that are unclear, some questions that the industry have. Is there anything in particular that you've heard in industry, questions that people are asking?
Yes, the common questions seem to relate to, for example, the implementation period. Will there be one? Will there be a transition period? How long will that be? Because the VASPs will need time to consider the impact of the VASP law on their business. Already they are considering the impact, but I think there is a hope that there will be a transition period. And given that Cayman is a leading offshore funds jurisdiction, the questions raised have been, will the funds industry be impacted? Will a crypto fund or blockchain fund be considered to be engaging in virtual asset services? Will a tokenized investment fund, issuing tokenized equity interests, require registration and pre-approval of their token issuance? Other questions relate to, are utility tokens covered by the framework? And I believe they are under the definition of virtual service token. But I must say the main question does seem to relate to fees. So, because many of the companies in this space are startups and they may not be able to afford high fees. The draft regulations refer to a range of fees. So currently there is, fee uncertainty on how much would be charged by CIMA depending on the complexity of the transaction and the type of virtual asset service. So I would say that fee certainty is very important for this industry. Finally, there have been comments that the legislation needs to be proportionate compared to other licensing and registration regimes in Cayman. So for example, we could look at the banks and trust companies law as the equivalent perhaps, and also jurisdictional comparison should be made against virtual assets, legislation of other jurisdictions. This is a new industry. So there is no one jurisdiction that is currently the clear leader in the virtual assets industry. So this means that Cayman needs to be competitive against other jurisdictions, obviously with the need to balance against compliance with international standards of AML and prudential oversight. But we cannot be over-regulating this industry in a disproportionate manner compared to other jurisdictions. So those are the general comments and questions that I seem to be getting from industry.
Thanks, Melissa. So I think one of the things you mentioned there is around virtual utility tokens. And I know utility tokens are spoken about a lot. And that's actually a question I've also received a lot. Samuel, I don't know if you can give us any comments around why we don't specifically have utility tokens when we talk about virtual utility tokens.
Sure. And Melissa, those are some great points that you raised. You touched on a lot of things there in your response. So I think Sarah on the panel today addressed the transition issue, stating that we'll have a phased approach to the commencement of the whole framework. So what the specifics of that are will be communicated in time, but it's safe to say that there will be some time for industry to adapt. So that's your first comment. And I think that's one of the most pressing ones on the minds of industry right now.
Yeah, we appreciate
your other questions on funds and fees. They're great questions and they're very valid. So let me acknowledge them first. They're still being worked on in the regulations, and the regulations aren't finalized yet. So although some members of industry might have seen a draft copy of the regulations, they're still being worked on. So nothing's for sure that it is included in there. So we're working on, the funds question, the fees. They certainly will be outlined in regulations, where necessary. To go back to your point, Petri, about utility tokens, and I thought that was an interesting comment from Melissa. And it's a comment that actually got brought up during the consultation as well. You know, why do you have virtual service tokens in the VASP law? The VASP law is the Virtual Asset Service Provider Law, just in case I use that acronym. So yeah, I understand that the digital asset sector has traditionally used a common typology around digital tokens, and that evolved. It meant classifying tokens in three main broad classes. So security tokens, utility tokens, and currency or payment tokens seem to be the top three. So, you know, security tokens, utility tokens, and currency tokens. So the existing typology, I think, gradually evolved as a result of different jurisdictions trying to classify different types of tokens and integrate them into their existing regulatory frameworks, like money services or securities, investment business, right? So how a token is classified also can impact how these jurisdictions treat revenue from those tokens for tax purposes. So they had very clear reasons as to why they would classify a token as a utility token or a securities token or a currency token. But an interesting thing is that the Financial Action Task Force, the FATF, which is the standard setter for AML, CFT, CPF regulation around the world, so they set the standards. They took a different approach when they looked at digital assets, and they defined the term virtual asset. I don't know whether or not they were the first, but that's what they did. The FATF identified that virtual assets can be used to transmit value between two different parties. And that's what they focused on, rather than adopting the utility, security, and currency token typology. So it defined a virtual asset as a digital representation of value that can be digitally traded or transferred. And that's a broad definition that can include a large number of different tokens. Since the FATF, as I mentioned, is the standard setter for AML CFT regulatory space, it's safe to assume that most countries are gradually going to adopt this broad definition from them, or one very similar to it. I think this can already be seen around the world with an increasing number of countries adopting the term virtual asset or a term with a similar definition in their local legislation. So when we were crafting the regulatory framework for virtual asset services, we had two options. We could adopt the existing typology of security, utility, currency tokens, and then try to adapt them to the FATF standards, or we could adopt the FATF's definition of virtual asset service. Our main goal was to make sure that our framework complies with the emerging global standards. So when the Virtual Asset Service Provider Law was drafted, it was drafted to differentiate essentially between a virtual asset and what is not a virtual asset. In the Virtual Asset Service Provider Law, we called that a service token or a virtual service token. So I think that term might have confused, you know, some individuals when they first encountered it. But that's the main reason behind it, is we're just identifying, we're making a distinction between a virtual asset and what is not a virtual asset. So virtual service tokens are tokens that are digital representations of value, but they can't be traded or transferred. So that can be credit card reward points. It can be credit towards a service, which is why they're called virtual service tokens, or even certain types of non-transferable digital tokens. The FATF found it important to ensure that these digital assets were not included in its recommendations, and we agreed with that approach. So that's, in a nutshell, why you don't see virtual utility token or utility token in the regulatory framework as we have it now. It's because we opted to adopt the FATF's approach instead of the existing typology that existed before the FATF came out with its updated guidance.
Thank you very much, Sam. That was very interesting. And it's very interesting to sort of see the angle that the ministry took and how you approached the entire process. That's very good. Sarah, I wanted to go over to you next. I know one of the things we've discussed a lot now is that there is clarity needed. There's definitely some questions still in the industry. And I wanted to find out, what is CIMA's plan in terms of communication and additional guidance to industry around the new legislation?
Yeah, I was slightly smiling when Melissa mentioned fees, because that's obviously one of the key things that entities need to understand, and potential licensees. But also the other key topic that comes up again and again is timing. So whereas we can't say too much at this stage because we are finalising the legislation and the timing in those aspects, what we can say is we will give lots and lots of guidance, outreach, FAQ, supervisory circulars. We will be doing a lot of work in that space to ensure that anyone who is active in this sector at the moment or seeking to become active in this sector in the Cayman Islands will have a clear understanding of both our regulatory expectations, but also of the process, the timing, the documents required, and of course the fees. So what we will likely do is do several different pushes of outreach, depending on which part of the licensing application or registration regime we are addressing. In the first instance, as I've said, there's a focus on the AML CFT, just getting that information about our entities as quickly as we can. And we'll be giving a lot of guidance about what that means in terms of the future progress, and then how you will then go on to apply for a license. And then in the later stages, we'll be giving more bespoke information about whatever particular activity, whether you're an exchange, a custodian, an ICO, what that might look like for you. So there will be, you'll probably be inundated with guidance, outreach, and supervisory circulars.
Very glad to hear that. I think everyone's looking forward to that. I think now we can go over to the audience questions. Unfortunately, with YouTube, we couldn't have the chat open because of some of the issues that have been on YouTube in the last while. So what we did is we got everyone who registered to send us emails with questions. So I'll pose a few of the questions, and then the panel can jump in, whoever feels that they can answer the question. The first one we got is actually very topical, and it's around decentralized finance. So it said, will decentralized finance be caught under these laws, and how will it be governed? So I don't know, Sam, if you might have some insight into that.
Well, you're asking me to jump in on that one, are you? So it's a good question, and let me start off by saying that I won't be able to give you a clear answer straight off the get-go. Decentralized finance is it's an interesting concept, and it's one that's rapidly developing and growing right now. It seems to be in most of the articles that I read about, in the fintech space. The supervision of virtual asset services is still very much in an early phase globally. The revised FATF standards have done a great job in increasing the speed at which countries are adopting standards. But there's still a number of elements today that need to be assessed and considered, which is why we included a regulatory sandbox regime in the virtual asset service provider law. And it's to deal with new and emerging and elements that just don't really fit inside the current regulatory space. Fintech's an evolving area, an evolving space, and I've no doubt that the supervision for new and emerging elements like decentralized finance will develop in time, and if needed. I think I even heard that the EU is currently considering a really interesting approach for decentralized services. I won't get into that here, but it's safe to say that in our case, a case-by-case risk-based approach will probably be taken for the supervision of these services where necessary.
Perfect. I think that's a very good answer. And yeah, it's based on the different entities. And you actually touched on the next question we got, which is also one that at the Blockchain Association, a lot of people have asked about. And this one says, why was the sandbox included in the law, and what will CIMA's approach be for the sandbox license? So Sarah, I guess that's angled towards you, as we have specifically asking about CIMA.
Yeah, and I'm happy for Sam to jump in as well on this one. I mean, essentially the sandbox Sandbox is very different to other licensing regimes because it's a process and a journey and a lot of back and forth, and will vary tremendously on a case-by-case basis by its very nature. So obviously we need to give very careful thought as to how that will work, timings, etc., and the rules around that. So we are still finalising the details, and in our phased approach, this will come into force at a later stage. So I can confirm that. But as I said earlier, guidance and outreach will be given around the timings and the process so that entities are fully prepared and fully understand what that sandbox regime will look like.
Perfect. Thank you very much.
I'll jump in there as well. Yeah. The sandbox also serves a dual purpose. Whenever I read articles in the fintech space, I mean, there's a new term that pops up almost on a monthly basis, and one new concept, a new solution, a new type of token. And so the sandbox, I think, is there for two purposes. It's commonly accepted, I think, that innovators have some difficulty and found some challenge in getting new technologies and approaches accepted by the broad public. And we've been told that one of the reasons for this was the lack of proper supervision and oversight the new services, because they don't typically fit in an existing regulatory framework. So the sandbox primary purpose is to help increase the speed at which viable innovations can be accepted and used in financial markets. But its second purpose, and probably even as important, it is as important, is to build a flexible environment where certain delivery methods or services can be assessed for risk. These new technologies and new products and new innovations that come up will require changes in our regulatory framework. And we needed as a jurisdiction, we needed a space where these innovations can be observed and assessed so that appropriate regulatory changes can be made as a result of that observation. So I'm really quite excited about the sandbox on a personal level, and I'm excited to see where it's going to go.
I definitely agree with you there. I mean, I think everyone is excited with this space, but especially with Sandbox and seeing exactly how we treat that. The next question is actually a very interesting one, and I included it almost out of self-interest just to see what your thoughts are on this one. And that was, does the VASP law include smart contracts? So I won't pick on anyone if there's anyone who wants to take that one.
Sarah, do you want to go?
I can see Melissa turning off her mute, so maybe she can go.
Well, I think, okay, the VASP law, obviously I was involved in drafting it, but I cannot see it expressly contemplating smart contracts. But to the extent that the smart contracts would be generating virtual assets, then I would see that in that particular case, there should be it could be captured by the VASP law. Speaking from my experience on the board of the Utilities Regulation and Competition Authority, which has remit over the electronic transactions law. When I was on the board, the view was that the electronic transactions law will likely govern the operations or recognition of smart contracts and blockchain-based transactions, because the electronic transactions law gives legal recognition to electronic records and documents or contracts. It's very broad. So if there's a concern that smart contracts are not recognized, I would say that we can look to the electronic transactions law for that legal recognition. Obviously, the electronic transactions law is very old, and it has the concept of who is the originator and who is the recipient, which doesn't quite apply in a decentralized world of blockchain. So I suspect that there will be updates that will be required to the electronic transactions law in due course to expressly contemplate smart contracts. But at the same time, I do believe that the electronic transactions law is broad enough to cover smart contracts.
Thank you for stepping in, Melissa.
I was going to say, I could just, I very much agree with what Melissa's just said. And no one likes to end a sort of panel discussion with the words, it depends. But with this one, it really does depend whether it fits the definition. And lots of factors go into that, not least whether the underlying currency being used is a fiat currency or it's virtual or what it is. I do think smart contracts are such an interesting area, though, because they're interconnecting with all these other activities and the types of providers that will be devising these. It's going to be something we're going to have to constantly reevaluate and rethink about. And as Melissa says, there are currently jurisdictions, laws that they can fall under and regulations they can fall under, but will those keep the pace at the smart contract that they're moving at? That is the real question. So very much watch this space on that one, I would say.
Perfect. So Sam, last comment from your side?
No, I think I have no comment on the smart contracts. I'm just going to say perhaps that just a certain level of interpretation will be required at some point, regardless, because we're it's a very evolving space. So, going back to the definitions in the virtual asset service provider law and looking, is this a virtual asset service? I think is the real core question. And that's going to be my only comment on smart contracts.
Perfect. I think even just having these conversations is already very interesting, because these are brand new types of instruments that haven't been contemplated traditionally. And you're looking at traditional examples, trying to see how they apply. But as we've said, there's going to be a lot of interpretation looking at the specific case to try and see exactly how this is going to be governed, what's going to happen with it. I think looking at the time, we're pretty much coming to the end of this. I wanted to firstly thank everyone, Minister Rivers, who gave our opening remarks, Samuel, Sarah, Melissa, thank you very much for taking the time. I think it's been a very interesting conversation. Really appreciate you guys. And then for everyone who's watching, thank you very much for tuning in. Please let us know if there's anything else that you would like us to discuss. If you want to see future events, please make sure you sign up to our newsletter on the Blockchain Association website. Please follow us on LinkedIn. I know we've got a few different events where we've got planned with some interesting developments and very interesting speakers coming up. So make sure you sign up for that. And with that, we're coming to an end. So thank you very much, everyone, and enjoy your afternoon.
Thank you very much, Petrie. Thank you.
Thanks for having us.
Thank you, everyone. Thank you, Petrie.